Hello everyone, this is a short revision presentation on government policies to alleviate poverty. This comes under the AQA syllabus, notably under year 13 or year 2, where you would look at the distribution of income and wealth. Now, the way this is going to be structured is I'm going to look at three separate policies, and when I go through each three, I've structured it in the way of the perfect paragraph. That means I'm looking at what that policy actually is, how does that policy work, what is the impact that this policy is going to have to address the issue of poverty, and I will also look at evaluation where I challenge the effectiveness of that one individual policy. If I look at the three that I'm going to look at today, I'm going to look at increasing the national minimum wage, which is intervention in the labour market, but notably I'm looking at this from the viewpoint of intervention and reform in the labour market to influence the distribution of income and wealth and to address the issue of poverty. Now that's slightly different from what I would look at it if I was solely looking at it from the viewpoint of just labour market reforms. Second policy is the supply side reforms, notably looking at education and training. So there are a number of supply side reforms that you could look at that will address the issue of poverty, but for today, I'm just going to look at education and training. The third one then is looking at tax and welfare reforms, notably looking at direct and indirect taxes and how can they influence poverty, and also looking at the benefit system in the UK and how we can use that to address the issue of poverty and to boost income levels within the UK. So before I get started, I just wanted to look at a quick review of the difference between absolute and relative poverty. So there are two major types of poverty. Now, poverty by sole definition is where income is not sufficient for an individual to live a full and healthy life. But when we look further into that, we can split it into absolute or relative. So absolute poverty is when people have insufficient income to afford the necessities of life, such as food, rent, clothing. So look at the necessities, the absolute basic needs in life: food, water, shelter, for example. It means that an individual does not have sufficient enough income to afford any of these basic needs. They cannot afford food, they cannot afford to pay rent, they cannot afford to have shelter or have access to water. Simply, they do not have the financial reserves to be able to live a very, very basic style of living. Relative poverty then is slightly different because we're looking at it in context from one country to another. So relative poverty is when people have income that is sufficiently less than the average income for that one particular society. So for example, what we might consider relative poverty in the UK could be quite different to that of a less economically developed country. So we know, for those of you particularly that are interested or study geography, you may remember looking at things like shanty towns. We have very little of those, if we don't have any of them really, in the UK. We do have areas of the UK where people do live in poverty, but in real terms, when you look at those people and the lifestyles that they live, and you compare those with those living in absolute poverty in other countries, it can be slightly different. Okay, so for example, if you haven't got the latest iPhone, some people might think that they're not as well off as other families. Again, in real terms, in terms of relative poverty, you may not have the incomes that other people within the country have. However, you do have access to the basic needs. You have food, you have shelter, you have clothing. When we look at these policies to alleviate poverty, it is important to start off, first of all, with looking at which are we trying to reduce. Are these policies, are we trying to have a quick fix to absolute poverty, or is the issue more deep-rooted in things like relative poverty? So certainly within the UK, we do have people living in absolute poverty, we do have people living in relative poverty. However, in real terms, we probably would have more people living in relative poverty than what we do in absolute poverty, because the UK is more economically advanced than other countries. So when we look at reducing poverty, poverty by source of poverty, the main source of poverty is unemployment. And so in looking at these policies, we probably in all of them will look at the ability to be employed or the act of actually being employed in the first place. So unemployment is a major cause of poverty because the unemployed have little income, relying on state benefits. So if you are employed in a full-time or indeed even a part-time job, you receive an income from your employment. We say that in labour markets, it is the firm that demands labour and it is the employee or the individual household, they actively supply their labour. You will receive a wage or a salary as a reward for supplying your labour, and you can only receive that wage if you are actively involved in employment, i.e. an employer actively employs you to work for their organisation. In the UK, if we do not have employment or if we're not employed in a labour market, we can benefit from the welfare system. We call those state benefits. Now, you may remember from macroeconomics that state benefits are they are considered payments in which the government receives nothing in return. They are transfer payments. The government receives nothing in return for paying those benefits. Unemployment can be reduced through both supply side policies, such as free training schemes for those who are structurally unemployed. So one of the ways we need to look at is, if unemployment is a source of poverty, what can be done to reduce unemployment? And of course, the main one is providing people with the education, training and skills to be able to actively source employment in that labour market. Poverty and unemployment are often geographical problems, with depressed areas seeing higher levels of poverty. Certainly in the UK, one of our main issues is that we face this issue with the north-south divide. We talk about the more glorious south, i.e. that there is more employment down south. The reason for that notably is that London is located in the south of the UK, London being the capital city for the UK. It is the home to the real headquarters of finance and of all the main captains of industries. You will find them down south. The north was more, if you look at our coal industries, our steel industries, sadly they have deteriorated over the years. Policies to overcome geographical poverty could include government subsidies for firms to set up in depressed areas. Also, building better infrastructure, transport and communication in depressed areas can provide an economic stimulus to create new jobs. And that does that in two ways. If you've got the buildings of roads, that can attract employment. We need people to build those roads. But also, when that infrastructure is set up, new rail line services, airports, roads, general infrastructure of movement around the UK, that encourages mobility of labour. It encourages individuals to move from one place to the next, notably to move from places where there is little employment to places where there are employment. And we do see that even in more advanced areas. If you look at London, for example, there will be more boroughs of London that are more heavily employed than others. There will be areas of London which are more affluent than others, and that normally links to the level of employment within those areas. And indeed, when you look at people that are employed, how much income do they warrant as a result of being employed? So you can have areas where people are employed, but are they employed in low income jobs? Or are people in more affluent areas? Is the reason why it's more affluent because they do achieve a higher pay for the work that they do? So the first policy we're going to look at here is an increase in the national minimum wage. So first of all, what is it? What is the national minimum wage? It is a minimum wage is a legally protected pay floor in the labour market. An employer cannot pay below it. It basically is a situation where the governments intervene in the free labour market. Now remember, a market is free because it is free from government intervention. The governments are intervening here because they feel that the wage rate that is set by the interactions of free labour market labour supply and labour demand is not high enough. It's a form of government legislation. It's intervention. The government feel that the free labour market wage is not high enough. It is not sufficient for an individual to live that full and healthy life. If you remember, in minimum and maximum prices in a product market, we often refer to a minimum price as a price floor. A minimum wage acts as a price floor for wages. Remember that the wage rate is the price for labour. A key point here is that a minimum wage will protect workers from being exploited by their employer. So it stops employees from being exploited. It stops employers from abusing their power of being able to set wages in the labor market. It stops them from setting a wage rate that basically means that they can take a large degree of profit, but their employees who rely on that wage to live their lives, they're not being exploited by providing their services to the firm, but not receiving a sufficient enough wage for the work that they do. Some chains of analysis on minimum wage. So how does it work? What impact will this policy actually have? Notably to the individual employee within the labour market, but also what impact will it have in addressing the issue of alleviating poverty, the one that we're focused on for this presentation. So first of all, it is set above the free labour market wage rate. So again, as I mentioned earlier, the government will look at the free labour market wage rate and simply devise that this is not high enough. It's not sufficient enough for individuals to live that full and healthy lifestyle. Governments feel that the free market wage rate is too low for employees to live a full and healthy life. Now, remember, that is a value judgment. It's very much so dependent upon what the government believe at the time. The increase in wage creates an incentive for people or individual households to work more hours, or it attracts more people to want to join the labour market or to actively seek employment. So naturally, we as individuals, we consider ourselves out to maximize our earnings. So I currently work full-time. I work full-time as an economics teacher. I actively supply my labour to the school, and in return, they pay me a wage for actively supplying my labour. That wage rate, I am incentivized to work, partly because of the rate of that wage rate. Now, one of the things that the minimum wage is very good at is that it actively reduces what we call the working poor. Now, the working poor is a situation where we often say that poverty is brought about by the fact that some individuals do not have a job. But there are people out there that do work, they work full time. However, the issue is that even though they're working full time or they are actively engaged in full-time employment, the wage rate they receive is still not yet sufficient or high enough for them to have access to the basic needs in life. And therefore, we have a situation where we do have an individual that is employed, but they're not earning a high enough wage rate. And that's an issue within the UK. We have individuals, we have some families where both parents work full time, but their children still live in poverty. It provides employees with a higher income, allowing them to increase their purchasing power, increase their consumption. So how does it actively reduce the element of poverty? Well, notably, it increases their wages. Their wage is likely to be their main source of income. Now, remember that income is a flow concept. We look at it in terms of it is money coming into an individual. The main source of income for most households within the UK is income through employment. It is income through the work that they do, the 9-to-5 standard jobs that they do. Here's a diagram that we would often draw for the national minimum wage. Now, there is another revision video titled Minimum and Maximum Prices, and I actually use the drawing of the diagram for minimum wage to discuss a minimum price. So you may want to jump over to that revision video later once this one finishes to look at how to actively draw this diagram from scratch. But if I look at here, if I look at wage rate W on the y-axis, that's the wage rate that is set by the free market labour by the free labour market forces of labour supply and labour demand. As I mentioned earlier, the government feel that wage rate is too low. What do? They then deliberately intervene in the labour market and they force firms by law to set the absolute minimum wage for that group of individuals at wage rate W1, which is higher than wage rate W. Now, the consequences of this is that it pushes the market into disequilibrium. So if we look here, if I look first of all, if I look at movement between point E, which is my original equilibrium, to point E1 along the red labour demand curve, I've got that contraction along the labour demand curve. The reason for that is because there is an increase in the cost of production for the firm. The firm, by law, must pay their workers more money. They must pay them a higher wage, and that increases the cost of production. Labour is a factor of production, and therefore the wage rate is the cost for employing that individual factor of production. The cost will then reduce the profit incentive for the firm. So the firm will actively reduce the demand for labour. Now that's a problem because it creates unemployment. We then subsequently have unemployment from Q to Q1. The firm may make them unemployed. They may make them redundant. Now, you may remember, for those of you that I teach, redundancy is different from sacking an individual. Redundancy is through no fault of the individual worker. The employer will go to them and say, look, unfortunately, due to circumstances beyond our control, we can no longer afford to pay you. And therefore, we're going to have to say your services are no longer required in this firm. And you leave, we would like to think, on good terms for the firm. If you are sacked, that means that you have breached company policy and that you've done something that goes against your contractual agreements. So it could mean that you've done something illegal, for example, within the workplace, and your employer no longer wishes to employ you. On the flip side of that, the supply of labour looks at the individual household. And what we have here is an extension from point E up to point E2. And this extension is brought about by that increase in wage. The increase in wage acts as an incentive for more individuals to either those that are currently employed to want to work more hours, to sacrifice their leisure time to engage in full-time work, or indeed we have individuals who were not willing to work or provide or supply their labour in the labour market. They then step forward and actively supply their labour in that labour market. And that active increase in the supply of labour increases from Q up to Q2. We now have more individuals actively supplying their labour in that labour market. So we have that extension along the supply curve from Q up to Q2. Now, often students will get confused between unemployment as Q1 to Q2. Unemployment is Q to Q1 because remember, Q2 were never employed in the first place. And that's one of our unintended consequences of the national minimum wage, is that an issue is that it actively creates unemployment. So when I challenge the effectiveness of this policy, this is my evaluation for this point. And remember, your evaluation of the perfect paragraph, you must challenge the effectiveness of that one individual policy. First of all, as I mentioned earlier, it pushes the market into disequilibrium. It distorts the free market. I'm taking a market that was in equilibrium and I am actively pushing it out of equilibrium into disequilibrium. I therefore subsequently create excess supply of labour or a surplus of labour. As I mentioned earlier, it leads to a rise in the cost of production for the firm. Assuming that labour productivity remains constant, this means that costs for the firm rise, production remains constant, and therefore there's a risk that profits could potentially reduce. So the firm, when increasing national minimum wage, the firm cannot expect an increase in productivity from their workers. Now, by default, we do tend to see that an increase in wage motivates the worker. And therefore, as a consequence, an unintended consequence, we do often see a rise in productivity because of that increase in wage. However, the firm cannot expect an increase in productivity. So if you assume, ceteris paribus, the costs rise, production remains constant, you subsequently produce the same goods as what you always did before, but you've now experienced an increase in the cost of producing those goods. Assuming that revenue and the selling price remain constant, you then will experience a reduced level of profitability. It leads to less demand for labour, which subsequently is unemployment. Now, this is where it really kicks in with when we look at this policy as a policy to reduce poverty. Firms will make their workers redundant, which therefore creates unemployment. Now, the real issue with this, the real unintended consequence, is that this goes against the government macroeconomic objective of low unemployment. Now, if you think back to your macroeconomic objectives, you've got economic growth, stable level of inflation. balance of payments, and the keeping employment low or reducing unemployment. You're basically going and saying, here initially, from the offset, in the first instance, is a policy that is designed to reduce unemployment. However, as a result of implementing this policy, you actively create unemployment. Now, if you're introducing a policy to reduce poverty, that in actual fact, as we know, unemployment is a source of poverty, this policy creates further unemployment, which therefore leads to further poverty. It's government failure. It leads to a worsening of that problem. And that's where governments are at risk of this, this real unemployment, where they're introducing a policy to solve one problem, which is poverty, but they're actively creating a further problem, which is unemployment. And that's a tricky one to get right. It depends on the elasticity of demand for labour. If labour is more inelastic in demand, it means that the rate of unemployment will be less than the rate of increase in the national minimum wage. And I suppose that's, to some degree, the best case scenario in terms of it's the one with the less level of risk because there's less unemployment associated with it. Another thing to factor in here is that if the national minimum wage increases the levels of unemployment and it increases the level of costs for the firm, how will the firm respond to that increased costs? So will the firm pass on the increased costs onto consumers in the form of higher prices? So if we look at if prices are going to increase, are then firms going to pass on those costs, higher costs in the form of higher prices? Is that going to lead to potentially individuals having to pay more for their basket of goods and services? Is things like food going to become more expensive? And will some individuals be unable to afford those? It also depends on the rate of increase. Is it enough? So is the minimum wage increasing at a high enough rate? Is the rate of increase sufficient enough for individuals to live that full and healthy life? So as I've said, again, if you're one of my students and I teach you, if you think of, as I said to you often before, if I said to you, you've won the lottery, the next question is likely to be, well, how much by? If I told you you've won £2 on a scratch card, that is significantly less than what I would tell you that you've won 2 million on the Euro Millions, for example. Okay, so think about the rate of increase. If the national minimum wage increases by 2 pence per hour, in real terms, that's very little. But will it increase by maybe £4 per hour? That would be a significant increase. Also think about as well, with any rate or increase in wage, and this is a reason why the governments are quite reluctant to frequently increase the national minimum wage, is we have a situation where you could risk inflationary pressure with that increase in the wage rate. If we look at here, just some key points. Again, you can pause this and read over it yourself. The case for a higher level of minimum wage in the UK, we've got equity justification, equity meaning fairness. Every job should be given fair pay linked with skills, experience of an employee. Gone are the days of the Victorian values of master-servant approaches to employee relations. Every employer has a legal duty of care to look after their staff, and part of looking after their staff and the well-being of staff is providing them with a fair wage rate, a wage rate that fairly reflects the skills and experience of that employee. Poverty reduction, which is the main reason why we're discussing this, a minimum wage boosts the take-home pay for thousands of lower paid workers. And in doing so, this policy can increase the wage rates of quite a significant number of employees within the UK, and therefore has a positive knock-on effect on individual households. Training, it encourages firms to upskill their workers and can lead to higher labour productivity. So one of the, again, the unintended consequences of this in a positive way is that when firms are forced to pay their staff more, they may look at the fact of, well, if I have to pay them more, I will want more out of them. Therefore, it may influence firms to want to provide training for their staff to see that they do get a return of some sort from this increase in pay. Incentives will improve incentives for people to look for paid work. So we may have a situation before where individuals refuse to join the labour market, may then step forward and say, well, in actual fact, it now actually pays me to work. I can get more from working than what I would do on benefits. Anti-discrimination, a way of tackling discrimination of low-paid female or younger workers. So it avoids this. Now, younger workers by default are less skilled, they're less experienced. So naturally, they wouldn't warrant a very high wage rate. However, this stops firms from exploiting them by paying them simply too low of a wage rate. It also steps in there as well to stop that gender pay gap. Arguments against the national minimum wage. A higher minimum wage adds to the cost of employing workers and might cause higher unemployment, as I discussed earlier. Particularly, smaller businesses tend to take a greater hit. Many smaller businesses struggle to make a profit, risk of a rise in business closures. There is that old phrase that in the UK, we are a nation of shopkeepers. We are a nation that is made up of small businesses. They really are the lifeblood of business and industry within the UK, and we very much so rely on them. And governments must think very carefully about the actions and how they can impact on those key small businesses. Training, there are better incentives for training than a minimum wage. For example, tax relief on apprenticeships. So rather than just go in and say, yes, pay everybody more, why not look at, well, if you want to earn a higher wage, why not offer tax relief or subsidize firms to engage in apprenticeship schemes or training schemes? Think about competitiveness. Might make many UK businesses less competitive in global markets. And that could be because we're paying staff quite a lot, but it's not in line with the rate of productivity. And that's something you need to be very careful of. Is the rate of increase greater than the rate of productivity or labor productivity increase? What you don't want is wages to increase by 5% and you only experience a 2% increase in productivity. Ideally, you would want a small increase in costs or in wage rates to therefore bring about an even greater increase in productivity. That's where the firm will really win, with an increase in pay. Inflation, higher labor costs might cause higher inflation, which then lowers real incomes. And again, we need to be very careful with that because we risk the costs or the prices of the basket of goods and services rising across the UK. So that's national minimum wage. Our next policy then is education and training, which is supply side reforms. So first of all, we start off this paragraph in our essays. What is it? What actually is education and training and this supply side reform? Now, education and training is one of many supply side reforms. So do please look in later in your own revision and study time into looking at what those supply side reforms could potentially be. So what is it? The aim is to give the long-term unemployed new skills which enable them to find jobs in developing industries. For example, retrain unemployed steel workers to have basic IT skills, which help them find work in the service sector. So basically, it's not rocket science, but education and training is what can be done to upskill an individual. We look at individuals in the UK as an asset. We look at them as a resource that contributes towards economic growth and economic activity within the UK and within the world, within the country. We look at individuals as people who will one day go out, contribute towards the growth of the UK, but will pay taxes, that will earn wages, and that will live their lives. What can be done to make sure that they are always employed during their working lives? It's important that we do all have skill sets because employers will want only to employ the best workers. If we look at over the years, we see changes in industry. So we see less people employed in industries like steelwork and coal mining, for example, and we see more people employed in what we call the knowledge economy. And that means that more people now have degrees. More people are educated at A-level standard. Everyone must in the UK be educated up to post-16 study. Even after GCSEs, everybody must be engaged in post-16 study of some sort. In the UK, we've got GCSEs, A-levels, the International Baccalaureate, BTECs, and we've got qualifications out there that suit every individual to make sure that everyone has a qualification to their name that allows them to gain employment. Now, as I've always said before, certainly for children, and education is a child's passport to life. It allows them to do things later on in life, to allow them to earn an income later on in life. So how does this policy work, and what is the impact? What impact will it have? So it involves government spending on education and training schemes. So education and training in the UK, most of it is provided by the state. So many children across the UK attend state primary schools and secondary schools and colleges. They are all funded by the public purse. They're all funded by taxpayers or by money, by revenue that's received from taxes. And the government control the degree of funding that go towards those schools and colleges. It could take the form of increased spending on state schools. So governments provide state schools with money every year to see that children can get through primary education and state education. They put them through their GCSEs, A-levels, etc. Subsidies given to employers to provide training opportunity schemes to employees. So we all probably benefit from the first one, having attended state schools. But governments can also subsidize employers and say, look, here's a pot of money. Go and use that to come up with your own training scheme. Train your staff to work better in the way that you want them to work in. We will subsidize that. We'll grant you money to do that, money that you do not need to pay back. Employers can also use it to pay the wages of workers, possibly for the first couple of months. Because remember, when you do employ a member of staff, for the first couple of months, they're probably just getting to find their feet, getting to find out how they do their job. And they may not contribute towards great levels of productivity for the firm. And remember, a wage is a cost for the firm, so that subsidy could be used to try and reduce the costs to that employer. It improves human capital. We all possess human capital. You and I possess human capital. It's the value of our skill set. It's how valuable the skills and qualifications we have contribute towards the workplace. It makes the individual more skilled and specialized, more valuable to their employer, and so justifies a higher wage, increasing their income. Now, when we say we're more valuable to an employer, what we mean there is that we contribute towards greater levels of profitability. And therefore, the firm is able to pay the higher wage. Education and qualifications act as a barrier to entry into the labour market. Improved education and training allows the individual to overcome this barrier. So one of the issues we face in the UK is that there are a number of individuals who would like to do certain jobs in certain industries, but they are restricted from being able to supply their labour in those industries because they do not possess the correct qualifications or the correct level of qualifications. And those qualifications act as a barrier to entry. So traditionally, they used to look at least a grade C in English and mathematics. Or now we look at the new 9-to-1 measure, we might say we're looking for a minimum of a grade 5 in maths and English at GCSE. You have to have A levels. You have to have a BTEC or a technical qualification in this area. You have to have a degree in order to do this particular type of job. That degree needs to be in this area, and the level of that degree or the outcome of that degree needs to be a first or a 2-1, for example. You have to have 5 years experience working in this industry before you can go into that industry. So this qualification and it can act as a barrier to entry. Greater exposure to education and training can reduce that barrier to entry. Something we've looked at before is it generates a greater MRP, which is marginal revenue productivity. And that is the addition to revenue as a result of employing one more worker. So how much more value does this one more worker bring to my organization if I bring them a job or if I give them a job? It makes them more valuable to the employer. It contributes towards greater profitability. And remember, if the one individual contributes towards greater profitability, it means that financially there's greater reserves of cash there to then be able to justify paying that worker a higher wage. I'll pay you more because you earned us more in terms of profit. It increases long-run aggregate supply. Again, as I mentioned earlier, it's a supply-side reform. It will shift the LRAS curve to the right. However, some of the challenges of the effectiveness of this policy. There's a time lag with education and training. If you look at in real terms, if you go to primary school, You would have done in England, you would have done 1 year at reception and then 6 years then at primary school level, from year 1 up to year 6. You then would have done from year 7 to year 11, which would be 5 years. Then in A level, you would have done year 12 and 13. So reception, primary, secondary, and A level, you're looking at roughly about 14 years. So every year, money has been spent educating you. It takes basically 14 years before we could potentially start to get anything from you. But even after post-16 study, some people will choose to go off to university. That's another 3 to 4 years that has to be added in. So it could be a stage where there's up to 18 years before the government can actively get anything from you. It's only whenever maybe you're in your 18, 19, 20 where you might actually start to get your first full-time job, where you will then start to pay taxes. And so it takes time to educate people. There's a time lag associated with it. Education and training is not a quick fix. It's a very expensive policy over a period of time. Think about the amount of money that's been spent on you over 18 years in education. That's thousands of pounds spent educating you. And think of the millions of children every year that are educated. Think of the costs of subsidizing employers to train their staff. Okay. And political gain. I put this one, an interesting one to look at here, because is education simply being used to get votes? Are the government simply throwing money at it to make it look as if we're looking after children? Is it simply being used for political gain? And are we simply spending money for the sake of it? Or are we spending money that is actively getting people in the right jobs because it is actively giving them the right education skills and qualifications? Unemployed may be unable or unwilling to learn new skills. You cannot force people to learn. You can want them to want to learn, but you can't make them. Okay, you can lead a horse to water, but you can't make it drink. At best, it will take several years to reduce that level of unemployment. How could you overcome the costs of education and training? Could it potentially mean that you have to increase taxes? Could this increase in tax push some families into further poverty? Again, government failure, a worsening of that situation. Our last policy then is reforms to the tax and benefit system. Governments can intervene to promote equity and reduce inequality and poverty through the tax and benefit system. Now, equity, we know, means fairness. Taxes is used to redistribute income. Think of Robin Hood. He stole from the rich to give to the poor. So that was, if you ever watched it whenever you were younger, that was probably your earlier exposure to the tax and the redistribution of income and wealth. This means employing a progressive tax and benefit system which takes proportionately more tax from those on higher levels of income and redistributes it in the form of welfare benefits to those on lower incomes. So we look at poorer families in the UK that receive access to the benefit system. The money that they receive through the benefit system is from the tax system. So the governments will tax those that work, they'll tax those that earn higher incomes, and with the revenue received from them, they will then give that to those who either do not have a job or those who are in low paid jobs. We can have cash benefits are designed to help those on zero or low original income. So basically we're giving money to those who have no income. They're not employed in work. State benefits include the following. We've got pensions and job seekers allowance. Individuals or employers make a contribution in the National Insurance Fund. So every month I pay national insurance as a full-time employee. I also pay into my pension pot, but my employer also pays into that as well. Okay, now my employer is the government. I work for a state school. Therefore, the government will then match my contribution towards my pension. Housing benefits for those that cannot afford their own housing. Income support for those maybe the working part, those maybe they are working but they can't afford full-time work or they can't do full-time work. Carer benefits, disability living allowance, child support. Generally, these are tests to see if individuals actually need these benefits, and they're called means tested. So we only give benefits to those that actively need it. So for example, I don't have children, therefore I don't receive child support. Direct taxes, so income tax in the UK is mildly progressive and helps to redistribute income. Individuals on low income pay no income tax. So one of the things you may suggest is possibly reducing the rate of income tax, because that will provide individuals with a higher level of disposable income, which is income after tax. The proposal allowance is set at, the personal allowance is set at £12,570 for the year 2001, 2022. So this is the most up to date at the time of making this video. The personal allowance of tax is 12,570, and that means that you can earn up to 12 as soon as your income hits 12,570. After that, then you have to start paying tax. So if you just start work, if I remember when I first started work with Bank of Ireland, it was then something like 10,500, I think. So as soon as you got paid up to 10,500, you then had to then start paying tax after that. Both the allowance and the basic rate limit have been increased in line with inflation from 2020 to 2021. So the income tax rate is always done in line with inflation. As a result, the higher rate threshold, the point at which individuals become less or become liable to pay tax at the higher rate, is £50,270 for 2021 to 2022. That means that if you earn higher than that figure, you then have to pay a higher rate of tax on any addition over that figure. So your suggestions may be that the government either abolish, which is always a very drastic measure to have, or that they reduce the rate of income tax or income tax allowance. These tax bans help narrow income gap and help reduce inequality. So you may suggest that one of the policies to alleviate poverty is to increase the rates of tax for higher income earners and reduce the rates of tax for lower income earners, and then use the money gained from higher income earners to then fund those on lower incomes or those living in poverty. We can then also look at the impact of indirect taxes, which is tax on consumption. In contrast, indirect taxes are regressive, meaning that as a percentage of income, the proportion of tax paid declines at higher income levels. And as such, the burden of tax is largely on the poor. This means that, as a rule, indirect taxes widen the income gap. Now, we always talk about this before when we look, and again, there's another video on my channel here on indirect taxes. When you increase an indirect tax, or you impose an indirect tax on a good, it will increase the price of the good. And as a result, there will be some families, notably those in low incomes, that will stop purchasing that good because they cannot afford that higher price. And as a result, they have been excluded from that market. And indirect taxes risk excluding a lot of people, notably those in lower incomes, out of particular markets. The progressive effects of direct tax and regressive effects of indirect tax generally cancel each other out. We also then look at what we call benefits in kind. Benefits in kind are those services such as healthcare and education that are provided free or heavily discounted at the point of consumption. So you could actually argue that healthcare and education is a form of benefits because it has been provided free at point of access to those individuals. These benefits can make a considerable impact on final income, increasing it considerably for the poorest and narrowing the gap between the rich and the poor. However, challenging the effectiveness of this policy again, we risk too much reliance on the state. We risk the government looking after us, almost like the parental figure. Not enough people are incentivized to go out and be self-reliant, self-sufficient individuals. It's difficult to get the rate of tax right. Where do you draw the line in the rate of increase or decrease? How can you justify a 2% or over a 4% increase in that tax? How can you justify a 2% reduction in that tax, for example? Where did this 2% come from? What makes you think that that 2% is sufficient enough? It may create the disincentive effect, which occurs when individuals are discouraged from working hard because they pay more of their income in taxes. Is it a punishment for doing well? So if we tax firms, for example, that go out and they employ individuals, they provide a good or service, but we increase their corporation tax, they may think that, well, look, I'm working 9 to 5 and I'm being punished for working hard here. The government's taking too much of my money and I'm not getting a good enough deal here. It can create moral hazard where some individuals may not look for ways to improve their own provision because the state provides insurance against poverty, unemployment, and disability. So that links back to the first point, the link with moral hazard and the reliance on the state. Why bother? Why should I go out and get myself a job? Why should I educate myself? Why should I work hard at school and get myself a degree and work hard on my apprenticeship or my technical qualifications, only then to then not get a sufficient enough pay for that? Higher corporation taxes could force firms to relocate to another country, so that could affect our international competitiveness. They may leave the domestic country and go and support the economy in another country. There also is that risk of fraud and avoidance. Individuals may try and fraud the government. They may try and avoid paying tax, which of course is illegal in the UK. Now, my final conclusion, if I was writing an essay on alleviating poverty, I always follow DISCOM. So I decide which policy is the best. Out of the 3 policies, which one in my heart do I believe is the one that's really going to solve this problem of poverty? It depends on the state of the economy. Think about the cost of the policies. If you're in a recession, is spending millions in education and training, is that really going to bring the economy out of recession quite quickly? Think about the affordability of the policies, the cost of those policies. Think about as well, it depends on whether we are trying to reduce absolute or relative poverty. Short run versus the long run, which policies will have instant impact, which will take time to implement. So for example, the national minimum wage will have instant impact if we increase that, but education and training will have a more long-term effect. The costs, the opportunity costs, could money be spent elsewhere? Will there be inflationary pressure? Would that be a consequence of this policy? Are there other policies out there? Again, look into your other supply side reforms. What about now? What is the most important policy? What is your recommendation? Should you use an integrated approach, a combination of all 3 policies, i.e. increase taxes to pay for education and training? So provide a solution to some of those problems. Now, I think it's important to say that poverty, realistically, you want to try and reduce the poverty gap. It's quite difficult and quite bold to try and eradicate it completely. Okay. Hopefully you find this revision presentation useful, looking over those different policies to alleviate poverty, but also following it in line with the structure of a 25-mark essay question. Good luck with your essay.